primary space, that because that continues to be very strong. In fact, DAM Capital's 840 crore rupee IPO opens for subscription on December 19th and ends on December 23rd. The company has set a price band of 269 to 283 for the IPO. My colleague Reema caught up with Dharmesh Mehta, the MD of the company, to discuss about the IPO, the company and its growth targets going forward. Listen in.
Well, firstly, I'm not comparable to the other players because they have NBFC, other financial services business in their segment. We don't have that. And the reason to IPO is you can attract talent and also gives a lot of credibility to the platform. And once that happens, it's easier to win more mandates and transparency is there. And the investors who invest early on can get the benefit of the growth story if we are able to achieve what we are planning today.
Okay. So what are in the pathway to growth? What is the plan towards entering into wealth management, asset management? Because right now your focus is more on merchant banking and broking.
We will eventually go into AIF and asset management and also into retail broking as and when. So there are certain plans which are already there. And I believe we're just setting up this entire platform, which touchwood has now been settled and hopefully will grow much more. And then we'll start looking to expand the other businesses.
So have you started work towards asset management, AIF or retail broking or not yet?
Not yet. I think it's in the works as we speak and hopefully soon we should do that.
You've also indicated in the RHP that to enable cross-border transaction and expand your global reach, you are looking to explore a strategic partnership with a global merchant bank. Is this going to be a significant revenue driver?
It will be, because the kind of platform we have built today and the kind of clients we have today, all of them or a large part of them will be acquiring assets globally. And having a strategic tie-up globally will help acquire, especially the mergers and advisory piece. So that can be large transaction happening abroad. So a strategic tie-up definitely will help in the future. It's not that we won't do well without that. It is just an additional advantage which we'll have as and when it happens. And
is there a timeline to this?
No, there's no timeline. We're not in a rush.
You're not in a rush. So there are three potential growth drivers from here on, new areas that you're looking into. One of this is global partnership, second is retail broking, and the third one is asset management / AIF / wealth.
That's correct.
Is that correct?
That's correct.
So when we look at retail broking, what is the approach that you will take? Would you look to build it organically? Would you look to acquire a company? Would it be a Zerodha type entity? What is the thought process?
The thought process is very simple. We won't be into cash burn businesses, so it won't be throwing cash and trying to acquire business. If it comes in the traditional,
discount broking?
No discount broking, and we'll try to build it the traditional way. And as I said, the balance sheet of DAM Capital won't be used to burn money. So whatever makes business sense, we'll do it. And we are in no rush. We'll build those platforms over a period of time.
And would you be open to an acquisition? Like, for instance, Mirai acquired Sharekhan?
We'll be open to acquisitions, like something how we acquired IDFC. If it comes at a good price, we're always open to it.
Okay. And what's the cash in the books right now?
As we speak, in the last March, we are roughly around 150 crores of cash. Hence, there is no requirement of capital, so we are not doing any primary. It's purely OFS to come to get listed. As of today, there's no plans to raise any primary.
So we have your revenues till September, Dharmesh. But from 1st of October, SEBI introduced a new circular which enhanced the regulatory measures. So there was rationalization of weekly, contract expiry, etc. Have you seen a drop in volumes?
Well, not so far. And as we said, we are more into institutional broking, so that's not impacted much.
But from an industry point of view, because there were some estimates which said that we could see a 20-25% drop in volumes because of these measures.
Maybe in the speculative segment, but we are not in those part of segment.
So since your revenues are linked to the economy, the financial health, the capital markets, India, and what's the pipeline looking like from here on?
I think so. India IPO story is, and overall fundraising story is very strong. And I believe that will continue for the next few years.
So your market share is 12.1% in IPO / QIP. What is your market share in institutional broking and M&A?
Well, it's not as simple as what you can see in institution as IB, which comes in public domain. So it's always a guesstimate, and I would not like to do a guesstimate on the same.
But it will be in very low single digits, is that fair?
Yeah, it should be in low single digits.
Even for institutional broking?
That's right. And that's the growth story. That we just because institutional broking, unlike IB, takes time to grow, because there's a time period by which you actually grow institutional broking, and that's why you're seeing the growth which has come in the last few years.
You've been also the fastest growing company in your space. 38% revenue CAGR, nearly 80% PAT CAGR over the last 3 years. Apart from low base, what do you think helped you achieve that?
I think overall markets have helped us, that, kind of fundraising which has happened in India, which is unheard of in the last 10 years. So that's definitely helped. And obviously acquiring market share will also help. As you can see in India, in the last 10 years, the fee pool has increased multifold. But the number of investment banks virtually who dominate this investment banking space are the same. So you just have to go and dent that space, which we have been able to, and try to gain market share.
You know, what's interesting is the kind of commission that you make as a book running lead manager has also gone up in FY24. But on an average, it's been between 1 to 2%.
That's right.
What is the average globally, and is there headroom to increase that or not really?
Well, you can't compare global investment banks to India because there's an underwriting risk which they take. It doesn't happen in India. So they're not even actually comparable. But I think overall the yields will move up. The yields which you make per transaction is definitely going to move up, and also the value of the transactions are moving up. So the size of fundraise which you were earlier looking into a few thousand crores, now Hyundai raised almost 27,000 crores. So that size has never happened in India. So I think the fee pool itself is going to move up substantially.
And one final word then on the markets. There is increasing opinion that since we've had 8-9 years, good years on the trot now, H1, at least the early part of 2025, looks to be a little more headwinded. Given the monetary policy may not be as easy as it was earlier anticipated, and there is policy uncertainty. Your thoughts, at least over the next 6 months, for the Indian markets?
See, when you have such a big bull run, you're going to have some consolidation happening. I think so the long-term story of India is intact. So I'm not too worried on that part. 3-6 months don't matter in the scheme of things.
But you think 3-6 months we could be in for some pain?
Not pain. I would say you will go through a consolidation phase. I wouldn't say it's going to be painful. Don't forget, we come out of a large election and plus state elections. I think so next year the focus of government will be into policies on the growth story. So you'll start hearing much more positive news, hopefully, once the budget is out. So I'll be hoping that India will go back to normal business from 2025.